Are you grappling with the thought of selling an inherited property and the looming worry of capital gains tax? Today, I'm cutting through the complexity of capital gains tax with clarity and precision. If you've recently come into the possession of a property, whether it's a charming estate in Stuart or a quaint villa in Hobe Sound, you are in the right place. I will dive deep into capital gains on inherited property and explore strategies for you to skirt around these taxes potentially. So join me as we demystify the step-up basis and share exclusive tips that should significantly lower your tax obligations. This isn't just about selling a property, it's about making informed decisions that maximize your inheritance while optimizing your financial outcome. So are you ready to transform your approach to selling an inherited property? Let's unlock these insights together. Hi, I'm Maria Wells, your guide to all things real estate on the Treasure Coast of Florida. I'm here to empower you with knowledge and strategies that work. I want to give you a quick heads up. I'm here to guide you through the real estate maze with my expertise. But remember, I'm not a CPA, an attorney, or a tax advisor. So it's best to consult with a pro for these intricate financial details. So let's dive into capital gains tax. Well, it sounds daunting, right? But what exactly is it? Well, it's the tax you pay on the profit made from selling something valuable like real estate beyond its original purchase price. Well, this could include anything from your home to stocks or even that classic car in your garage. How much you owe can depend on how long you've had that asset, your income, and where you live. There are two main types of federal capital gains tax. There's short-term and then there's long-term. If you sell within a year, that's short-term, tax like your regular income. If you own it for more than a year, well, that's long-term, with rates that could generally be more favorable, ranging from 0% to 20% based on your income. And while many states also add their own capital gains tax, well, here's a shout out to us in Florida and a few other states where there's no state capital gains tax to worry about. Now, let's tackle the main event, how to avoid capital gains on inherited property. Well, when you inherit a property, the IRS gives you sort of a gift, which is known as a step-up basis. This means the property's value for tax purposes jumps to its current market value at the time of the inheritance or at the time you become the legal owner. So how do you get this value? Well, typically for a home, you will have a real estate appraisal for the date of the previous owner's passing or the date you officially took ownership of that home. This is a game changer because it can significantly lower the capital gains taxes if you decide to sell. You focus on the value increase from when you inherited the property, not from decades ago when it was first purchased. For example, let's say this is your parents' home that you have inherited and they bought it for $250,000 30 years ago. The home is now worth $750,000. Well, you don't want to pay taxes on that $500,000 in equity. You would have an appraisal and then it is documented the worth of the home today is $750,000. This is where your tax basis starts. You can then make the following decisions on whether to sell or not. So here are some options. So number one, you could act fast, selling quickly after inheriting. The step-up basis means you might owe less in capital gains taxes. It's calculated from the property's value when you inherit it, and the property really hasn't had time to appreciate if you sell it quickly. Number two, pricing the home. If you decide to sell and there's a significant amount of capital gains, you could price it a little lower, making the sale appealing for a buyer and possibly a fast sale and paying Uncle Sam a little less, which could be a win-win for everyone. Next is make it your home. Turn the inherited home property into your primary residence, which could lead to some tax breaks. And that's because the IRS has exclusions now if you live there long enough. That's for another video. Next, you may want to consider renting. You're not ready to sell. Well, renting out the property can be a great strategy. You're making income while holding the asset and letting it appreciate. And potentially it can lead you to a tax deferral options down the line. When you gain that equity, property, there are other things that you can do when selling this property. Next, expense deductions. Keep track of any of the improvements or sale preparations that you have made, as these can reduce your capital gains. These expenses can be deducted at the time of sale, and again, please check with your CPA or accountant. Now, navigating capital gains tax on an inherited property can seem overwhelming, but there are strategies to lighten the burden. As your real estate guide, I'm here to help you make the best decisions in selling your inherited home. For the detailed tax strategy, though, be sure to consult with a financial expert. If you're looking for more real estate tips and tricks, don't forget to subscribe to my channel. If you like this information, please give me a thumbs up. I'd love to hear from you if you have found yourself in this situation. Just write it in the comments below. And in the meantime, I will catch you on this next video where we will continue to unravel the mysteries of real estate world together. So stay sunny and take time to enjoy this beautiful day.